Hey there. We will be talking about the control systems in the accounting, and it's all about the trial balance. And everybody knows, that trial balance is considered as a control system in accounting world because it acts as a checkpoint so that you're sure that the total debits are equal to the total of the credits. And because of this, it will help you to identify the errors and confirming the what do you call this, integrity of the double entry system. Again, the trial balance is a control system because remember that every transaction in accounting must follow the rule debits equals credits. So the trial balance lists all the ledger accounts and their balances, and it ensures that the sum, okay, or the total of the debit balances should be equal to the sum or the total of the credit balances. So debit equals credit. So as you can see here, you have the worked example, and I'm gonna try to explain it very quickly. In this example, you have Sine, who owns and runs a shop selling clothes, and the following transactions have taken place. So number one transaction, let's analyze Sine's cash sales amount of $612. So it means that cash will be considered as an asset, and the asset will be increased, okay, because the money comes in. So again, the debit here is the cash. On the other hand, the credit is sales because sales also known as the income. So the income increases, and every time that the income increases, it's always you have to put it on the credit side. Okay. Next, how about the third? That's the first, right? So debit is the cash, sales is the credit. Second is she purchases, okay? When we say purchase, it involves buying. So she has bought trousers from Caitlin 129 on credit. So you have the clue, and the clue here is on credit. So automatically you owe something to someone, okay? Because you have the clue on credit. So when you say purchase, you have bought trousers. So this purchases is what we call the expense, okay? And all the expenses are will be increased on the debit side. On the other hand, this one on credit is under Caitlin, and Caitlin is the creditor. So it's the liability. It's not an asset. So the liability increases. So again, the second part is the debit side will be the purchases as an expense because the expense increases. And the credit side will be Caitlin because you owe 129 to Caitlin. Now, the third is Sines sells a shirt and shoes to Upsala, $76 on credit. So it means that again, who what is this 76? Okay. Sine sells products to someone. But then the question is, did has Uppsala bought, yeah, she bought it, but have has she given the cash? Okay. So it means that it's still on credit, so Upsala hasn't paid, okay, Sine. So again, if she hasn't paid the seller, so definitely Uppsala now, okay, owes something to Sine. So Uppsala is a debtor, which means it's also known as the accounts receivable. So again, let me take note of this. Okay, so for number two, okay, for number three, Uppsala owes something, right? Which is a 76 and and of course it will be on the debit side. And again, the credit side will be sales. Okay, sales because Sine sells a shirt, and sales because the income increases. Okay, again. So this Uppsala debit, it's all about the receivable, and all most of the receivables, or of course, this accounts receivable is considered as an asset. Okay, next number four. She pays rent for her shop 250 cash. So it means that she has a debit. So what has she paid? Her rent, and her rent is an expense. And if the expense increases, then it will be on the debit side. On the other hand, what happens to her cash? Her cash as a debt, as an asset, decreases. So every time that there's a decrease of the cash, automatically the asset will decrease, money goes out, so it means the cash becomes on the credit side. So again, every time that there's an expense and you have paid it, okay, using your money, bank account, so definitely your cash will definitely decrease. And every time that there's a decrease of the cash, because remember, cash is an asset, so it's on the credit side. Okay, next is she purchases shoes 345 for resale, okay, for resale on credit. Let me have this. On credit from Rahit. So what does it mean? So let me, okay, it's not working. Okay. So here, she purchases shoes. So every time that you purchase something, she purchases, obviously this one is on the debit side, because purchasing shoes is an expense. So it is an expense. Okay, for resale. So what does it mean? Look, that she's going to buy something so that she will buy the shoes so that she will sell it to another person or another customer. But then did she, just analyze, did she pay Rohit? No, because again, you have the word on credit, right? So it means that this becomes a liability. So again, she bought the shoes for resale, okay, so that she can sell it again, but then she hasn't paid it. She hasn't paid Rohit. It's on credit, so definitely it's going to be a liability. And the other name for that is, of course, she owes something to Rohit, okay? Said liability increases, and every time that the liability increases, it will be definitely on the credit side. And that kind of liability, what kind of account is that? That kind of account is also known as not a receivable. So what is the opposite of the receivable? So that is the answer. Okay. So now, Cine pays wages using the cash. So obviously, that one, okay, when we say wages, it's it is an expense. It is an expense, and the expense increases. And then, of course, what happens to the cash? The cash decreases. So definitely, every time that there's a decrease of the cash, which is an asset, of course, it will be on the credit side. So enter the transactions in City's ledger, carry down any balances, extract the trial balance. Let's double check here now. So again, so this is what we call the T account. So you do have the transaction, and then you will have the T account here. So each accounts you do have uh the amount. Okay. And then after you do the T account, then you have to prepare for the trial balance. Now, so again, as you can see here, assets increase the debit side. So let's see that part. Yeah. So a trial balance is made up of balance extracted from the ledger, and it's the summary of the balances in all the ledgers. Remember that you do have also the cash. Cash is on the debit side. Sales is your income. It's always on the credit side. So this one was the summary of the T account. Purchases, like all the purchases, okay, every time that you buy something, it becomes an expense. Again, on that situation, purchases is considered as a debit. Okay. Caitlin, on the other hand, that was your liability. So any liability will be on the credit side. Upsala owes something, so it's your receivable. So rent is an expense. Rohit, you owe something to Rohit. It's 345, and the wages would be the final account here, 166. So if you're going to add it, after you add it, it must be balanced. Okay, that's the concept of the trial balance. Of course, uh, as you can see here, it's only an explanation. Assets are always on the debit side. Cash balances, okay. Expenses are always on the debit balances. Examples are the balance of the rent, the balance of the wages, the balance of the purchase account, credit balances, of course, all about the incomes and the benefits are always on the credit balance, especially on the sales account. All the liabilities are considered, of course, included in the credit balance. So again, because you owe. So this is the summary. This is the summary of the trial balance. All the debited balance are the assets and expense, credit balance, liabilities, income, and benefits. So there's also a tip on this side. Okay, so do all elephants chase large Italian buffaloes? It means like debit, assets, expenses. C here means credit. And then you have large liabilities, I, incomes, and B, buffaloes, of course, the benefits. Now, always remember every transaction follows a double entry principle. So one account is debited. Okay, let me take note of this one. Always remember this. Every time that you do the trial balance, you have the concept of the double entry principle. Double entry principle. Okay, always remember the idea of trial balance is has this foundation of this accounting principle, which is double entry, which means one account is debited and another is credited so that you can keep the books balanced. Okay, now let's proceed to the next part. Okay, work example. The following is the list of accounts heading. Accounts heading of the list of heading found in the ledger. Tick the columns. Is it? Yeah, yeah. This one. Tick the columns. Let's see here. Tick the appropriate columns to show the category on which item falls, and then, of course, whether a balance of the account will appear debit or credit. Okay, let's see here. Okay, when we say wages, let's see. Yeah. So when we say wages, it is considered as an expense. Okay, let's see here. Wages, it's an expense. And the reason behind that, it is a cost. Okay, because it is the cost of running the business. So every time that you have a cost, every time that you have a cost, of course, what will happen to your profit? It will reduce your profit. And every time that you reduce, there will be the reduction. There will be a decrease of the profits. It means that they are recorded as the expenses. So expenses are always sit on the debit side. Okay, on the debit side, wages or expenses sit on the debit side because they represent the money flowing out of the business. Okay, again, it's because it represents the money going out of the business. That's why it becomes an expense. Okay, next is the premise. Premises. Premises are something that the business owns. So definitely you have the clue. Okay, business owns. Business owns, meaning to say that you own it, it's definitely an asset. Premise is an asset. So assets are the resources with the future value, like the premises, and it increase on the debit side. So definitely recording the premises as a debit only shows that the business has control over that resource. So again, premise is an asset and it's on the credit side. Debit side. Again, premise asset debit. Next, BICO. Let's have first, yeah, BICO, a credit supplier. So again, obviously, BICO is a creditor. Again, the word is creditor. Creditor, because the creditor, it's BICO, okay? So when we say, yeah, BICO. So when we say BICO is a creditor, BICO is a creditor, it means that he is someone that the business owes money to. Okay, so it means that you owe, okay, you have to pay BICO. You have to pay BICO. So it means that you increase your liability. Again, BICO, a credit supplier, is a liability, and liabilities always go on the credit side. Always go to the credit side because they represent obligations. So again, I'll give you the clue of obligation. If you see the word, not obligation, but the word owe, okay? Like you have to pay, like it's a must for you to pay. So it means that it's an obligation, it will be your liability. And the credit balances really shows what the business must pay in the future. So again, so it is a liability increasing the credit side. Next is advertising. Obviously, advertising is another expense, and because it also this advertising doesn't really make or create tangible asset, okay? But then it really reduces or it decreases the profit, right? Because like you want the you need the advertising so that you can do some marketing. So it means that it reduces your profit. So just like the wages, it's always a debit because it represents the money that's spent, okay? You're spending the money to operate the business. So again, so this advertising is an expense and debit side. Next is sales. Okay. When we say sales, all you need to do is to think that sales generate income. Okay. They're always together, synonymous. So when we say sales, it shows the increase of the profit. Okay. And by the accounting rules, the income accounts are credited. So again, sales and then it's credit. It is in the part of the income. And this shows that the money is flowing into the business, money going into the business. And last but not the least is the bank overdraft. So when we say overdraft, it means that the business owes money to the bank. Again, overdraft owes money, okay? You have the obligation, okay, to pay the bank. So that's really a liability, and liabilities increase on the credit side. So again, overdraft is recorded as a credit balance. So again, I will give you another summary. So let's have this one. So when we say debit, okay, when we say debit, you have the business owns. When it means business owns, it means the assets. And then you have also business spends. Every time that the business spends something, automatic, it's what we call the expenses. Okay. But when we say credit side, okay, credit side, business owes, okay, so you have the word business owes, that's a what we call liability, and the business earns, and that is the income. So all you need to think about is the four things here. So again, if it's a debit, always remember the business owns something, that's for the assets, and assets are debit. If the business spends something, then of course, automatically that account is on the expense side, and expenses, increase of expenses are on the debit. And on the credit side, if the business owes something, it's a liability. That's the concept. And the increase of liabilities are always on the credit side. And if the business earns something, that's what we call the idea of income. And the increase of income is always on the credit side. Okay, let's proceed to the next one. Yeah, the following balances have been extracted. Let's see here. Yeah. The following balances have been extracted from the ledgers of Laxumana on April 30, 2015. So what we need now is to identify first, before you do this trial balance, first is you have to identify which one is which, especially which one is asset, which one is the liability, so and so forth. Okay. So for example, buildings. So when we say buildings, it's the shop or property owned by the business. And this type of account, obviously buildings is a long-term asset. So it appears on the debit side. Again, building is building is an asset, definitely on the debit side. Okay, let's have fixtures. Fixtures and fittings. So when we say fixtures and fittings, these are the furnitures, these are the shelves, these are the counters, and these fixtures and fittings are considered as an assets. And these assets are being used in the shop, and obviously these are recorded as that part of the debit side. Now, how about, obviously you have the motor expenses. Motor expenses are always on the debit. These are the costs. Okay, motor expenses are the cost of running a van. Okay, when you say running a van, the fuel, the repairs. So again, motor expenses reduce the profit, so it should be on the debit side and it's considered as an expense. Next is rent. Okay, rent is 7,000, and everybody knows the rent is a payment for using the premises or the area. So again, expense is a debit. Now look at this, local taxes. When we say local taxes, these are the business the business taxes paid locally, and the taxes are your obligation because you obligation to your to the government. Okay, yeah, so it means that it's not a liability, but rather it's considered as an expense. Okay, because like it's every time that you make a business, like you have to pay it because it will protect you. Okay, so local taxes are always considered as an expense. Next is insurance. So when we say insurance, these are, uh, premiums. These are the premiums that you use, that you have to pay to protect the assets. So for example, like if your building has been damaged because of the fire, then of course you will use your insurance. It's a sort of protection. So again, this insurance is considered as an expense. Again. So again, expenses are the taxes and also the insurance, because there's the idea here that once you paid the two, it will protect you. okay? And it only reduces your profits. Obviously, cash in hand is considered as an asset because when you say cash in hand, it's the physical cash available, okay? And it's an asset, so it will be on the debit side. Now, how about the balance at bank? So when we say balance at the bank, it means that the money held on the bank account. Okay, balance at the bank, it means like this is the money on your bank account. So definitely this is an asset. It's on the debit side. Next are the receivables. Again, as I've told you, receivables are considered as an asset, and trade receivables are the customers who owe money. Okay, the customers need to pay you. The customers owe you the money. So these are what we call the debtors. So let's see, receivables, aka the debtors. So again, these are considered as the asset. These are what you call assets, and they are on the debit side. Next, trade payables. Okay, this one earlier I forgot the term, but as I told you, payables, when you see the word payable, automatically this, okay, payables, aka creditors. And when we say creditors, of course, everybody knows that creditors or payables are these are the creditors that the business owes the money, and it is considered as the liability. So again, so in the accounting world, liability. So in the accounting world, what you need is to identify some terms. Okay, maybe you will be confused with the terms. So let me repeat. Receivable, also known as a debtors, it's considered an asset, always on the debit side. Payables, also known as the creditors. Creditors and payables are considered liabilities. They're on the credit side. Sales. Okay, obviously, when we see the sales, it's always on the credit every time that it's a revenue. Okay, it's a revenue for selling the goods. So again, sales is a revenue. So every time that you you have sold something, it's sales, and sales are considered as part of the credit side. Again, the sales are considered as the income, and the income increases the profit, so it's always at the credit side. Now, how about the purchases? So again, when you say purchases, these are the goods bought for resales. These are the goods bought for resale. So these purchases are considered as your expenses because you buy those things so that you can sell it. Okay, so for example, like you have bought some soft drinks, okay, some drinks because you're going to sell it because you have your own shop. So again, these purchases are your expenses. And of course, last but not the least, you have the capital, and capital is always on the credit. Capital is the owner's investment in the business. So again, let me reiterate. So this one is your investment in the business. So again, it represents your equity, which is on the credit side. So give let me emphasize something. So if it's on the credit side, there are the liabilities that these are the things that you have to pay. Okay. At the same time, even the sales or the revenue will be on the credit side. Even your capital, the investment, uh, the owner's investment in the business, okay, also known as the equity. It represents the equity, is always also on the credit side. And again, so this is the trial balance of this. Okay, let's answer this one before we proceed to another topic, which is really easy. The debit side of the ledger uh, account totals 242. So the debit side it's 242, but the credit side is 200. That's the scenario. The question is, what is the balance on the account? Okay, what is the balance of the account? So the answer here is 42. 242 minus 200 equals 42. So why 42? What's the reasoning for that? Because in a double entry bookkeeping, okay, whichever side is bigger, again, whichever side is bigger, it will determine the balance. So now that the debit is bigger than the credit of 42, so the account carries on the debit side. It only means that the account represents, this 42 represents either an asset or an expense, since those normally really sit on the debit side. So again, so what is the balance of the account? 42. But then remember, like in the trial balance, it should be equal, right? So it means that this $42, which is, we don't know why, it's always it's either the asset or the expense. But again, the reasoning for this is whichever the larger, okay, identifies the balance. So again, so it's 42 on the debit side. Again, let me repeat, in the double entry bookkeeping for number one, whichever side is larger determines the balance. So again, the debit exceeds the credit by 42. So this 42 account carries on the debit side. Number two, generally, which side of the trial balance will have the most entries? The answer here is, of course, debit. Okay. Why debit? Because it all includes all the assets and expenses. That's the reason behind that. So business usually have many different assets. It can be the cash, premises, vehicles, receivables, and of course there are many expenses. The wages, the rent, what else? Advertising, purchases. And for the credit side, there are only a few categories, such as like the income, the liabilities, and the capital. That's why debit side entries are many. Okay, so number two, debit. Number three, liabilities are found on the blank side of the trial balance. Of course, liabilities are found on the credit side. Credit side, what's this? Credit side of the trial balance, because it represents obligations. It represents obligations, and at the same time, of course, um, obligations such as overdrafts, the loans, and even the creditors. Okay, liabilities increase debit side. Another is number four. Incomes are found on the blank side of the trial balance. Incomes are always found on the credit side because again, the incomes, also known under the incomes, you have the sales, the commission received, the interest earns. It will increase the profit. So again, every time that there's an increase of the profit, that's part of the credit side. So income accounts are credited to reflect the money flowing in the business. Number five, in which ledger would you expect to find the account of Giselle, the supplier goods on credit? Okay, we're talking about the ledger here. Um, and the answer here is the purchase purchase ledger, also known as the creditors ledger. So it means that the suppliers who sell the goods on credit are what we call the creditors. So their accounts are kept on a ledger, and the name of the ledger is the purchase ledger, which this purchase ledger tracks the amounts owed to the supplier. Okay. Number six, in which ledger would you expect to find the sales return account? Okay, obviously you have the word sales, right? Sales return, it's the sales ledger, also known as the debtors ledger. So when we say sales return, because you have the sales return, right? So when the sales return reduce the amount, again, the sales return reduces the amount of income from customers. So since they relate to the customer, since they are connected with the customer, also known as the debtors, they are recorded as the sales ledger. Again, debit balance, assets plus the expenses, credit balance, liabilities, income, and the capital. A trial balance only shows whether the total debits will be equal to total credits. And always remember that it's just a first check for accuracy. But of course, there might be some errors which are not revealed by extracting a trial balance. And there are like 6 types of errors that are not revealed in a trial balance. Aside from, the obvious will be if the obvious would be if the totals do not agree. But sometimes if the debits and the credits are equal, we have to double check it again because again, there might be some errors, okay, which are not revealed by a trial balance in detail. So the first is the errors of commission. So I have here also in a nutshell about this. Errors of commission arise when correct amount is entered on the correct side of the wrong account. What does it mean? It means that the correct amount is entered, okay? The number is entered on the correct side, but in a wrong account. So for example, rent, you know that rent is an expense, right? So rent was paid by check and the motor expenses account was debited with 600 and the error would not be revealed by the trial balance. So what does it mean? It means that for instance, you have a rent, the rent of 600 was being paid, but instead of putting it on the rent account, uh, someone put it on the motor expenses account. So that is the errors of commission. And why the trial balance doesn't catch it? Because the debit and credit entries will still balance numerically, but the classification is wrong. So the trial balance only checks the totals, remember, and not really the account accuracy. So again, errors of commission, you entered it on different account, but on the same type. For example, like instead of cash, you have to put it on the cash, but you put it on the receivable. Or yeah, but usually errors of commission, we committed it on the expenses. Next will be the reversal of entries. So when we say reversal of entries, this occurs when the correct figures are used, but the entries are entered on the wrong side of the accounts. Again, so it means that the correct figures are used, but the 2 entries are posted to the wrong side. Okay, the both of the entries are posted to the wrong side of the accounts. So here, if $70 of goods were purchased from Smith and Smith's account in the purchase ledger was debited into 70 and the purchase account in the general ledger was credited as 70, trial balance would still balance. It means that instead of debiting it debiting the purchases and crediting to Smith, the opposite was done. So here, the reversal of entries is that, in short, the debit and the credit sides just change, like, or swapped. That's the idea for number two. Okay, the third is the errors of omission. Okay, errors of omission. Because, okay, number two is, that's why it's reversal. It's because it's reverse. Okay, the word itself, it's swapped. It changed the position. Okay, again, errors of commission, wrong account on the same type. Reversal is swapped, the debit and the credit. And the third one is the error of omission. Okay, meaning to say, these errors occur when a transaction is completely missed from the ledgers. So when we say missed, meaning to say it's completely left out. Okay, the transactions are completely left out. So for example, the purchase invoice was destroyed, so you don't see the purchases and the supplier. So meaning to say, the debit entry is zero, the credit entry is zero, because it's not on the list. So it's missing. The debit and the credit entries are missing. That's why you have the word omission. Omission means omit. And so again, if the debit and the credit entries are missing on the trial balance, so it means the totals will still balance, okay? But the transaction is absent. Okay, let me repeat again, so that we will not be confused. So if it is an error of commission, wrong account, same type, okay, only the account's name, reversal, swapping of the debit and the credit, omission, the transactions are left out, completely omitted, the transaction is absent. Okay, and the fourth one is the errors of principle. Errors of principle. So meaning to say, these errors are when a transaction is posted to the incorrect class, incorrect group of account. So for example, if the new vehicle was purchased and was entered into the motor expense, because vehicle is an asset, and motor expense is of course expense on the general ledger, it will not be revealed by the trial balance. So in a nutshell, errors of principle is the transaction is posted to the wrong class, like wrong type of account. So again, buying the example, you have bought an asset, but you record it to the expense. So that's your error of principle. And of course, the trial balance doesn't catch it because the debit and credit entries are still balanced, but the classification is wrong. So the asset becomes an expense. That is the principle. That's the error of principle. Okay, let's see on the next one. The fifth one is the errors of original entry. But before that, let's have a revision. Error of commission, okay, wrong account, but on the still the same type. Reversal, debit and credit sides are being swapped, being changed. The position, omission from the word itself, omit the transaction left out completely. When we say omission, it means that wrong type of account. So for example, asset versus expense, liabilities versus uh, income, okay? Different accounts from the very start. And then you have the fifth one, which is the errors of original entry. So when we say errors of original entry, it only means one thing. You wrote the number, If credit sale is 176, and then you put 167. So again, this one is pretty easy. Wrong figure copied everywhere. So again, the number is wrong. Okay, so that is the idea of errors of, where is it? Yeah, errors of original entry. So the number is wrong, the figure is wrong. Um, of course, the debit and credit use the same wrong number, so the totals will still match. Okay. Next is the compensating error, but before that, let's have a review again. When we say commission, wrong account, but the same type. Reversal, debit and credit sides are swap or interchange. Omission, from the word itself, omit. The transactions are being left out. The principal is, of course, wrong type of account. Wrong type of account. Number 5 is the original entry. And when we say original entry, it means that wrong number recorded, number recorded from the start, from the beginning. Okay, it all starts with the ledger. And when you do the trial balance, it's balanced, but then again, uh, it all starts with the general ledger. And last but not the least, you do have also the compensating errors. Okay, the last one will be the compensating errors. Let me compensating errors. And when we say compensating errors, cancel each other out. Again, if the debit side of an account is totaled incorrectly, okay, let's see. Because the meaning is very vague here. So when we say compensating errors, it means that there are two mistakes, and these two mistakes cancel each other out. So it means that you have again, let me, there are two mistakes, or there are two errors. There are two errors, and these two errors will cancel each other out. It means that there's something to do with overstating and understating. So when you say overstating, you need to say you one side of the account is high, and then understating is one account is low. Okay, and then yes, or low or lacking. So for example, there's an extra. Okay, the question here is total incorrectly, and the 100 is too much, and the total separate account with credit entries is incorrectly total of 100 much. So again, there's an example. There's an extra 100 on the debit side. Okay. And there's also an error on the credit side, which is too high. Okay. Your debit side is too high, and then your accounts credit side is too high. So it means that there's a commission, there are two errors on both sides. So again, two wrongs make the trial balance right. So that is the idea of compensating error. Okay, let's have a quick recap, because I think that you're all confused. When we say commission, okay, think about expenses. Rent expense, the item from the rent expense made an error of putting it on another expense. Wrong account, but in the same type. Okay. When we say reversal, error and reverse, from the word itself, reverse, just like the Uno, right? The Uno game, you swap. You change the debit and the credit sides. Third is the omission. Omission, from the word itself, omit, it means delete. So you delete the transactions, left out completely, that's omission. The error of the principal, this one is the wrong type of account, wrong type of account. So in short, you put your cash instead, you put the, what's that? the item on the cash, but you put it on the receivable or the liability, that or an expense, then that will be a wrong type of account. So that is the error of the principal. Another is the original entry. So the errors of original entry. This one is pretty easy because it's like wrong number recorded. You record a wrong or a different number from the very start, from the very beginning. It has something to do with the numbers. Okay. And the last is the compensating error. There are two errors. Because of these two errors, they cancel each other's one, and it has something to do with overstating and understating. So you have the compensating errors. Okay, let's have again. Can we have this? Okay. The working example. So this will be our last activity. Vehicle repair paid by check. Okay, it was the requirement. Identify the types of error listed above. Okay, repaired. Okay, the vehicle repair paid by check of 649. So this is the entry, right? This is the entry. The entry shown is the debit in the debit entry. It's in the bank account 649, and the credit is motor expense account 649. Okay, as you can see, number one, this is the transaction. Okay, you repaired your vehicle and you paid it by check 649. So again, the correct, okay, what will be the correct entry for number one? The correct entry should be, again, expenses, right? Expenses will be the debit side. And again, the credit will be the bank, because you have the cash out, right? The cash out. So every time that there's an expense, it's a debit. And then of course the credit side should be the bank of 649. And what is the type of error? What's the name of the error on this transaction number one? Okay, the error is obviously the reversal of entries. Okay, errors of reverse, because the right accounts were used, but okay, right accounts are used, but the debit and credit sides are swapped. It's just swapping. So it's reversal of entries. Okay, next. Oh, next one is, let's see here. Okay. Next one, machine sold for 4,000. Okay. Machine sold. So you're selling the machine, you have sold it, and then you got 4,000. Okay, entry shown here is the debit bank account 4,000, 4K, sales account 4K. Now, what is the answer here? Because again, machine sold for 4,000, debit entry. The correct entry should be, what will be the correct entry? The correct entry will be bank should be 4K. But what about the credit entry? Okay, the credit entry should be machine. Okay, why? Because remember, you sold the machine, right? And then you got your money. You got it by selling. So it means that what has been increased? It has been, the money has been increased from the bank. Okay. And what have you lost? You have lost an asset, which is a machine. So why in the credit side? Because machine is an asset, and then there's a decrease of it, right? So it means that the account should not be the sales account, but rather the machine, because it's an asset disposal. So therefore, what is the type of error of this transaction number two? And that type of error is the error of principle. Yeah. Remember when we say error of principle, it means that wrong type of account. So in this case, like you entered sales account, but then again, always remember that machine is an asset. So it should be, the credit's name should be asset. Error of principle. Okay, next. Next here we have number 3, goods purchased $29 from Trip and Corporation on credit. Okay, now the entry shown that you have the purchases of 29K. Okay, and the credit is the print and another name of the company. So what is the what is the correct entry here? The correct entry here is debit should be purchases, right? Debit should be purchases of 29, and the credit should be, yeah, credit print and corporation on credit. And the error here is the error of commission. Why? Again, goods purchased $29. So again, this one is your debit side, and your credit side should be the name trip and not the print. Okay? Even me, I got confused here. So again, the name of the creditor is wrong. So again, this one is the error of commission. The right side was used, but the wrong supplier's account name. So again, so this one is the wrong entry because the name of the supplier is not Prit, but Trip. So therefore, they're still creditors, right? They're still the creditors, but then the name of the creditor is wrong. So this kind of error is what we call error of commission, because the right side of the creditor was used, but again, the wrong supplier account name was chosen. Same category, but wrong account. Same category, which is creditors, but of course the wrong account, the wrong name of the creditor. Okay, next is number 4. Number 4 is goods sold 76 on credit to Ricket. So the entry shown here, you have sold it to Ricket. Okay, and then of course, the sales account. Why sales account? Right? The correct entry should be how much? It's not 67, but it should be 76. Goods sold 76, but again, you have the same. You're correct when it comes with the entry, right? But then the number is wrong. So if the number is wrong, then that is the error of original entry, because the amount was copied wrongly. It was 67 instead of 76. And both the debit and credit agree, right? They are the same. But the figure in the transaction is incorrect. So again, let's have a quick recap here. So for the vehicle repair, the error type is reversal. Let me see if I can. Yeah, the error type here is reversal because correct accounts but wrong sides. Okay, correct account. It's the same. Okay, the only wrong here is they interchange. That's why it's reversal. Number 2, machine sold. It is a principal because the asset is treated as an income. Again, machine is, of course, an asset. So you put it here as a credit, and it's not a sale, but it's the decrease of the asset, which is the machine. That's why it's principal. Number 3, the goods purchased, the error here is the commission because of the wrong supplier. So instead of trip, because this is on the entry, they put Prit. So again, obviously this one is commission. And last is goods sold. Original entry, that's the error type because of the wrong figure recorded. So in short, again, let me explain this further. So when we say, let's see here, when we say reversal, you have to swap the sides. Okay, let's see. Where is that one? As a recap of everything. So we have to do the recap before we end this session. Yeah, again, as a recap, when we say commission, wrong account but same type, reversal, like complete swap of debit and credit sides. When we say omission, you omit the transactions left out completely. The error of principal, wrong type of account, but wrong type of account. Original entry, wrong number, and the compensating error is of course there's the overstating, errors cancel from each other. I think for the last one, we do have also the self-test. Okay. At least we can figure out like the answers later on. A trial balance balances. This is proof that there are no mistakes in any ledger. True or false? So obviously it is false, right? It is very, very false because the trial balance only proves the total debits equals total debits, and errors like wrong account, wrong number, wrong figures, or missing transactions can still exist even if there's a balance. Again, a trial balance balances, but it's not a proof that there are no mistakes. There are always mistakes, and the mistakes can be having wrong account. Okay, wait, let's mistakes can be wrong account, wrong account, wrong figure, and also missing transactions. Okay, number 8, what is the purpose of extracting? Okay, extracting the trial balance. Let me do this. Yeah, what is the purpose of extracting a trial balance from a ledger? Okay, what's the purpose of getting the trial balance? Of course, it's only for accuracy, okay? Arithmetical accuracy of the double entry system. So it means that it only ensures that every debit there is a matching credit. So the books should be balanced. So that's the purpose of having trial balance. Okay, number 9. Number 9, let's see number 9 here. Number 9, can trial balance be used for any purpose, any other purpose than checking for the accuracy of the double entry system? So the answer for 8 is like, checking the accuracy of the double entry system. Yes, the answer is yes here. And it also, trial balance can also help prepare the financial statements. Okay, helps prepare the financial statements, and the financial statements are what we call the income statement. It also, trial balance can help the balance sheet, okay, since it lists down all the balances in one place. So again, the answer is yes. Trial balance is not only for the accuracy, but it also helps prepare for the financial statements such as the income statement and the balance sheet. Okay, number 10. Number 10, we have also a trial balance is extracted from the general ledger. Okay, so you have the general ledger, you will get the items, you will get the data from the trial. Okay, you have the general ledger, you will get the data from it and use it to the trial balance. True or false? Of course, the answer is true for number 10. Why? Because the general ledger contains all the accounts. So again, like the book of all books. So again, the general ledger it contains all the accounts. And when we say all the accounts, we talk about the assets, liabilities, the expenses, the income, the capital. So the trial balance is prepared by listing all the balances from the general ledger. So again, if the general ledger is wrong, okay, then there will be errors on the trial balance. So a bookkeeper must know how to identify the accounts because it will all start with the general ledger. And number 10, let's see number 10 here. On which side of the trial balance would you find rent receivable? Okay. So again, which side of the trial balance would you find the rent receivable? You have the receivable, and you know that receivable is always on the debit side, and receivable is always like it's an asset, but you have the word rent. Okay. um Rent receivable on the trial balance, you will find it on the credit side. Okay, why? Because rent receivable is an income. Okay, again, let me repeat. Again, this is a receivable, right? But then you have the word rent. So rent receivable is actually an income. Okay. So when you say an income, because it's the money expected from tenants. So it means it's an income. It is an income, and income always appear on the credit side of the trial balance. Again, rent receivable is the cash that you're expecting from the people who are paying for the rent. Okay, so if you own like if you have a business and it's a rent business, renting of the house, you're expecting money, you're expecting the income from the rent. Okay, so rent receivable is considered as an income. So again, rent is income. What else? Yeah, that's it. So to summarize this one, number 7 is false because trial balance can hide the errors. Number 8, what's the purpose of extracting the balance, trial balance from the ledger to check the accuracy, okay, to ensure that debits equals to credits. Can a trial balance be used for any other purpose? Yes. Used for preparation for financial statements. If the trial balance is extracted from a general ledger, yes. General ledger first, and then T account. Remember the T account, and after the T account, to prepare the trial balance. And credit, and last will be rent receivable is considered as an income. I hope that you've learned something, and good luck in your exams.